shirt in the laundry.
No, so essentially what you're describing is all currencies against real goods are losing value, right? So if you're buying any currency in the world to go purchase the things you need, such as energy, housing, it doesn't matter. It's going to cost you more than it did a couple of years ago. However, if you have your money in dollars, right, so it's not going to be hit as hard.
Right. But like we all know here in the United States, the dollar is not getting stronger, dude.
It's like this. We're all on a like imagine a really really long treadmill, like a really long treadmill, a mile long treadmill, right? So you can stay on the thing. Nobody's quick enough to meet to the end. Everybody's moving backwards, but like the U.S. is at the head of the race, but everyone's still moving backwards.
And I don't want to draw too much comparisons, but in 1935, FDR had his New Deal, very similar to the Inflation Reduction Act. The Supreme Court consistently shot down FDR's attempts to radically transform the economy during the Great Depression. He actually was putting in minimum wage laws, a lot of more socialist things that
Right.
we can argue about, but he was doing it. The Supreme Court kept saying, no, we're not going to do it. So we were in the midst of the Great Depression. And it was right then that FDR then put out the Executive Order 6102 to actually seize gold. So before or during the beginning of the Great Depression, we actually had a gold-backed currency. So instead of now fiat, we actually had each dollar was worth about it's like 0.2 ounces of gold or something. But you could actually go to any bank and exchange your money for hard gold. And so during the Great Depression, people were looking at their paper and said, I don't want paper. I need gold in my house. So everyone was going to the bank, and the Federal Reserve's gold stash they had was getting drained in the 30s because everyone from like other countries with dollars were even saying, fuck you, U.S. government, you're going down. Let me have the gold, right? And so that's why FDR seized the gold and then artificially inflated the price of gold to then manipulate the currency and to kind of spur economic development. And this was really interesting because a lot of people talk about, they're going to seize gold and Bitcoin again. And the point I would like to make is that the reason they seized gold in the 30s was because we had a gold-backed currency. It was to
Right.
manipulate our dollars. If they seized gold now, it would just piss off people, and a lot of people would go to war. Well, they are with Russia, but we'll talk about that later. And if they tried to seize Bitcoin, that's pretty much akin to them coming in and trying to seize the couch that you bought. That's just your fucking personal property, and they can't manipulate the United States dollar by doing that. But if maybe the government said we're gonna take all the oil in the world, then they could do it. But yeah.
All right. So, coming back to current day here.
Yeah.
So
We don't have a gold-backed currency, and so
yeah,
the reason we're seeing this is because we have fiat currency. What does fiat currency mean? It's not backed by anything. It's essentially a promise that your $20 bill can be exchanged for another $20 bill. That's what it means when all debts are paid. That's like it says it on the dollar, right?
right.
So just kind of get back from this kind of economic turmoil we're in and like how we're going to get by it, and the Bank of England tapping out, like you accurately said, a lot of these pension funds, they're very much in the market and they have these bonds. And so when everyone rushes to raise interest rates in this economic warfare to beat the United States, keep their currency high, but then also not destroy their economies while everyone's economy is already in a recession and we have World War III going on, it's just it's a really bad time to be raising these interest rates, which then make the price of the bonds that a lot of these pension funds have as their safe bets go down in principle because of these moves. And then it causes a margin call because although it's unrealized gains, so the bonds are just in their portfolio.
Right.
This time, the bonds are priced every day on the principal, and the principal is inverse of the yield. So as the yield goes up, if you want to liquidate that bond, the principal that you can liquidate it goes down.
Right.
So essentially, they're looking at their portfolio saying, okay, if we held on for 10 years, we'll be fine. But we need to pay people that are retiring next year. So we need to sell some of these bonds. Well, these fucking bonds are down 30-40% on the year. It's the worst start since the 30s. Yeah. So
You know what?
yeah.
There's an interesting, and I'm just kind of going bigger picture here because it's not something I fully understand, but like I seem to have a knack for like themes. So I was reading a little bit about the Credit Suisse failure,
Yeah.
and that they might be going under, and a lot of that is actually related to that Archiego's hedge fund, which, if you don't remember, that was the big hedge fund that got wiped out when Wall Street Bets pushed the thing with GameStop, right? Why
Yeah.
did you make money on that, or you just like that? How
Fuck yeah, GME, Roaring Kitty, let's get grab a drink. Watch the Netflix, watch the new Netflix documentary on GameStop. Work
okay?
out, fucking, it will get you so fucking pumped.
All right, so but just to kind of describe it, so you got this guy, long time hedge fund person. He's got all the access, and he's shorting GameStop, and essentially the market's like, this doesn't make any sense. He's shorting more than what exists, and so the market teams up against him, and he goes belly up. Now, what's interesting about this guy going belly up is that he had major credit lines from like all of the biggest players, and the guy was in the game for the longest time and everyone loved him, and then all of a sudden when he gets caught and gets fucked up, now he's in trouble for like insider trading and whatever else because he fucked over he took money from it's like taking money from the mob. He took money from those guys, and as long as you're making the money, everyone's
Right.
cool and happy, but when you fuck up, you fuck up. Now here's what's interesting. So like even on the hedge fund level, that guy's playing with other people's money and leverage, right? But then you start looking at like this pension fund, they're playing with leverage. And you
Yeah.
start realizing that like forget like the inflation in the markets of that there's too much money in the system, we're trying to go spend money. There's like a whole nother world of derivative products. Like if you just start looking at like fractional reserve banking, right? So at the outset, I put a deposit in a bank and then they 10x that money. But forget about that. When that starts getting deposited in other places, and then the banks start fucking like leveraging on that, leveraging on that, leveraging on that, there like it would appear to me that there's a musical chairs game of pretending like there's enough money in the system to support the amount of money that fictionally exists as a result of these derivative products, right? And so it's like any movement in any direction, the Fed needs to kind of come in and create that chair. It's musical chairs. It's gotta put something there to just, but like it's not. If something like this small is affecting just pension funds to the point where a Federal Reserve has to step in, like that's kind of my idea right now. It's like you got musical chairs, but it's like we don't actually control the volume at which the chairs get pulled away. And it's like also like it's almost like the chairs are like attached to each other. So as you pull away chairs, more chairs actually start disappearing because what ends up happening is because liquidity is coming out of the system, it's like more and more people have to then reduce their leverage bets to cover the other positions. And that's where you can really have like a fucking, house of cards where it's like
Right.
the whole mirage starts coming down because like in other words, it's just a better like I just to kind of explain a little bit more and I'm letting everyone know I'm trying to figure this shit out, and I don't spend enough time actually reading because I waste way too much time just reading the newspaper every day. So, like, I kind of get the theme on the bigger topics. I haven't really delved into the weeds,
No,
but
you're doing a great job, dude. Assets and liabilities. That's exactly what it is.
it's like because every single person has a almost like a faulty evaluation of their leverage position because something else is still considered intact. But it's like once one thing is considered not intact and that guy's got to sell something in order to cover that loss, well, then that goes down in value. And then someone's got to sell something else because that they got to cover this thing. And then all of a sudden, all this money starts washing out of the system, and you realize all of the previous evaluations were overinflated, and it just like fucking snowballs.
And ideally, this is avoided by the idea of a hedge fund, right? They're supposed to hedge their bets,
Right.
but you can't hedge your bets when we've gotten to a point where the market is so manipulated by this fake fiat money and printing and backroom deals and derivative instruments that it's just not linear. Like you said, like when some people pull, it pulls out. And if you talk to any Bitcoin maxi, like the whole ETH or the if you want to talk specifically price in Bitcoin, the whole price appreciation of Bitcoin is based on people using it and understanding it. And that use and understanding is going to come from the more people realizing these musical chairs can't keep being pulled and put back into place.
There's also something I hate about like the half socialist nature of this, where it's like I know that like even in the current system, in some capacity of like half fake capitalism, we're probably better off than full
Right.
socialism.
Yeah.
Um, but like there's something intrinsically more unfair that you get like to me it's like once you get the bailout, like even in this situation, whatever pension fund gets a bailout, then like that should just become a socialized property. Like to some extent, it's like the CEOs that are there should not be able to make the money that they're making. The investors should not be able to make the money that they're making. It's like if we've got to step in and save you from some horrible doom, like you're getting on our boat now, like we own you. Like
What
that's it.
about what about Ukraine? They should all be working for us.
You mean because we're bailing them out? You mean the actual people of
Yeah,
Ukraine?
they would all be speaking Russian now if we didn't send them 50 billion fucking dollars.
I don't know that I agree with that example as much as my financial example of CEOs. No, but there's something about like if we got to step in and save the entire financial system because of a mistake that you just made, then it's two part. One is, are we making changes so that your mistakes aren't going to require another bailout? Like, are we going to actually acknowledge that there's a systemic problem here and not just to let the banks exist in a system where the second there's any hiccup, like they just get a bailout?
That
And then
systemic
two,
problem is part of the game.
I know,
That's
I
like,
understand,
yeah,
I
yeah.
understand that, but like, then I think you should have to step in and like, there should be a system where it's like one, if you get to bailout point, like we're clawing back your house. It's like if you want to play this game. By the way, I seem to hear an echo. Am I echoing a whole bunch, or is it not too bad?
I'm getting it fine.
Okay,
Yeah, is it echo from your voice or mine?
it seems to be mine. I must be getting just picked up in your headphones. It seems minimal.
Oh,
Hopefully, it
I'll turn
seems
down my
like
mic.
there should be some variable that like it should be almost treated like securities fraud. The same way you get barred from working. It's like if you end up at the point where you're at bailout, that should be treated like securities fraud. Like you engaged in, however it's treated, where people lose their licenses, they're not allowed to do things because they engaged in securities fraud. I feel like if you bring your company to the point of bailout, then there should be some sort of like negligent treatment type thing and shame that comes with that.
Do you know where they do that?
Where?
China.
Japan? Yeah, I was about to
If
say.
if, if
Yeah.
you if you start a company and it goes bankrupt, your family leaves you. Your wife leaves you in China. Yeah. It's
Wild.
really interesting. Yeah, dude. And that's what, and it kind of makes, yeah, there's no further explanation. That's the culture, right? Yeah. Yeah. So, and I couldn't agree more. And it comes down to, greasy hands and like butt padding, right? Like it's because the people that make those laws are the ones
Right.
that get money from them, right? And so yeah. It's just so obvious now with the internet and people thinking more critically what's going on. And I think it just goes to a really good point I heard I'll get Josh Brown on CNBC make about the Federal Reserve. And it's a great point about a surgeon. When a surgeon's doing a surgery in a hospital and he makes a mistake, they stop the bleeding, but then they tell the surgeon to go home and they call in someone else to finish the surgery. Not because the surgeon's bad or is incapable, but because of overcompensation. It's a human psychology. They send the surgeon home and they get a
Oh,
new surgeon in. Whoever caused the problem, Jerome Powell, Janet Yellen, even if you're capable of solving it, it's good practice. It is the must practice that you need to get the fuck out and you get a new surgeon in there.
interesting. Because yeah, no, I get what you're saying.
Yeah.
All right. So the big storylines that we basically already covered them. I will issue a slight correction because it was funny. When I was doing my prep on the ECB situation, I thought I understood it. And then when I started describing it, I was like, oh, I don't think I get the mechanics. So I would just think the bigger picture is just that like small obvious changes should not be create like for example, if you're a pension fund and you're creating very sophisticated and probably diversified portfolios, it should not lead to needing a bailout if there's changes in the interest rate.
You're
Like that.
thinking that they're doing it all up and up.
No, fine, but then someone should actually be stepping in and
Right.
going, there's fraud in this market. Because I'm just saying
Yeah.
that if you're creating a retirement portfolio for people, which means that you're going to have them in the market, let's say for 40 years,
Right.
to have a portfolio that if interest rates would go up would require a bailout, That's retarded. That makes no sense that over a 40-year, especially if you're buying into bonds when the interest rate's at what, 1, 2, 0%. That literally makes no sense. You would be forecasting that over the next 30 to 40 years, interest rates are not going up from zero.
Right.
I mean,
I would.
it just makes no sense. Like, how do you put yourself in a position where something that's like the moon is going to change? There's going to be tides. It's like, how is it requiring a bailout when something as simple as just a change in the interest rate is eroding your portfolio?
I think that's overall a great question, especially because the Fed is now signaling it. But like I told you, the Fed was buying mortgage-backed securities in March of this year. The Fed was that's a form of quantitative easing. So we were
Right.
quantitative easing in this year,
Right.
like 6 months ago.
Because
So
essentially every time if they're buying all of the, but you see, this is like the half socialism once again.
yeah, yeah,
If the Fed is going to buy up all the loans, then what they're essentially doing is like, we're going to trust you on the risk that you're actually like doing good homework about whether or not these people should be in
yeah.
homes, right? We're going to let you capture a spread in all the commissions of initiating the deal, and then we're going to take the risk off your plate of that you can just take all these mortgages, package them together, and we're going to buy it. Now, what kind of homework is the Fed doing when they just go, yeah, we'll take all that risk off your plate? And then if it goes belly up, like the banks get to, you see what I'm saying? That's the half socialism. It's like, we might as well just have the Fed do your mortgage. It's like, why are we letting
That's what's
someone,
happening. Yeah,
why are
yeah.
we, no, but I'm saying it's like, we're creating artificial middlemen,
Right.
which I understand
For
that
an
it would,
appearance. Yeah.
yeah, I understand that, like, then at least there's some financial incentive in capitalism, and it would probably be worse if it
Right.
was just being initiated from the Fed. Like, I actually, I understand that, but I'm almost saying from a fairness perspective, like, the fact that a bank gets to middleman the government's business
Yes.
and let it being risk-free, it's like, I don't know, there's a part of me that's like, well, then we might as well just have socialism. Like, why do these people just get to middleman this?
That's so interesting, and I haven't thought that through at all. I think it's such a brilliant point that what other institutions are just kind of appearances or front men for the government, right? Is it the NIH, right? Is it academia? Like what other institutions are really just doing like kind of government business that like
Right.
we think it's okay because they're free companies like Twitter. Fuck you, dude. The FBI
Right.
told them what to do, dude. Is that a free company or are they doing the government's business just like the banks are doing now? I think that's really interesting.